Don't be too excited. Just because the Dow Jones went up almost 400 points today, it closed the day only 157 points. I mean, last Monday, not Monday of this week, but the week before, the Dow Jones was up 400 points, but then the rest of the week, but then it dropped every day since then. So this really doesn't mean anything. Tomorrow, stock market could drop even more, or maybe go up a little bit just to give hope and then drop some more. I mean, this is up today because of hopes that trade war between China and the States is ending, but then tomorrow they'll realize that it was false hope, and then the stock will drop again. So this means nothing. So for that reason, I was looking to buy something that pays dividends. Today, I bought this mutual fund from Quadravest called Financial 15 Split Corp. I bought it today at 7.4, about $1,000 worth. Now, if we look at the distributions on this mutual fund, it pays 12 and a half cents per month, and it's been paying it since, we could see last time I paid it was November 2018, and it's been paying it since January 2013. So it's been paying it for more than 5 years. And then here it stopped for almost 2 years. It hasn't been paying it. So 2011, 2012, it hasn't been paying it. Half of 2011, it's been paying it, 12 and a half cents. And then you could see again in 2009 stopped paying it. 2008 it was paying it, and it was even paying 10 cents before that. So it's not the most consistent product they have. I mean, the most consistent product they have is DFN.to. This one here is their most consistent one, but I already have some and I wanted to diversify. Didn't want to buy more of it. And this one right now at the price that I bought it at $8, it gives me a yield of 15% per year. While the other one, FTN.to, is giving me a yield of, well, let's calculate it. If it pays 12 cents, if it pays 0.12, if it pays 12.57 cents per month divided by the price that I bought it at, which is 7.4 times 12, so it pays a yield of 20% right now. So I went for 5% extra with the risk that it's not as consistent as the other one. And especially if we go through a crash, it might stop because as you can see, it stopped in 2009 and it stopped again in 2012, 2013. So basically, it pays the distributions as long as net asset value is above $15. So as of November 30th, 2018, net asset value was 16 or 15.9. How this company works is that, or how this mutual fund works is that it invests in big name companies. So this one in particular, FTN.to, invests in US banks and some Canadian banks. And then they sell covered calls on their holdings, on their positions. Depending on a lot of factors, you can make between 2% and maybe 5% per month by selling covered calls if they're selling monthly calls. And that's how they're able to pay this 12 cents per month per share consistently by selling covered calls. So because of course they have much more money, they're able to do it in a much more profitable way. And the risk with this stock or this mutual fund is that they could terminate it. Every 5 years, they have the possibility to terminate it. So then the next expiry date for this mutual fund is December 1st, 2020. Come that day, they will pay $10 to the preferred shareholders and the rest to the Class A shareholders. So the stock that I bought is a Class A shares, bought at 7.4. So right now, if let's say they were to terminate this mutual fund today, I'd be getting 5.9 for it, but I paid 7.4. So that's the risk with this mutual fund, but in reality, what they just keep renewing it every 5 years. Plus, I have 2 years to worry about this expiry. But in return, I'll be getting 12 cents per share every month. And if it ever goes up to $10, for example, or even 9.50, I could sell, take my capital gain, and move on. And if you look at the chart, the past year, 52-week high is 10.6, 52-week low is 6.8. If you look at 5 years, as you can see, it's been trading mostly around easily above $10 for the past 5 years. And the lowest it reached in the past 5 years was 6.7, and it was for a very short period. If you look since 2003, you could see that in 2009 it reached $3. But besides that, it's usually trading around $10. It dropped back in 2011. Between 2011 and 2013, it dropped back down to from three to six, and that's why it wasn't paying dividends during that period. But then when it came back up, it started paying dividends. So this could be the beginning of another drop. Who knows? But I decided to put $1,000 in it. If it isn't the beginning of a drop, I'll be collecting 20% dividends per year. If it is a drop, then probably for the next short period, I won't be getting anything for it. I'll just be patient. If I have more money, I'll buy some more. If not, I'll just be patient, then it's gonna recover like it always does, and then I'll be collecting 20% dividends per year. So you can see for the past 5 years, it's been paying dividends. If we go back even more, it's been paying dividends since 2013, and then it stopped between 2011, between June 2011 and January 2013, it stopped the dividends, but then it continued until today. And so from December 2003 to November 2008, it's been paying dividends, and then it stopped from November 2008 until May 2009, so not even a year. And then it started paying dividends again between May 2009 to June 2011, and then it stopped from June 2011 to January 2013. So that's probably the longest period. So a year and a half almost it stopped. So since 2004, in the last 14 years, it only interrupted dividend payment between this period here and this period here, which is about 2 years and a half max. So out of 14 years, it interrupted dividend distribution for 2 years and a half. So I think that's pretty good, pretty pretty fair risk to get 20% to get a possibility of 20% dividends per year. And I like their model, which is to invest in big name companies and sell covered calls on them, which is something I'm trying to replicate, but because I don't have the volume, it's not as profitable. And I just started, so why not invest in a company that that has more expertise, that has more volume, and that's been doing it for a longer period and is able to generate the revenue that covered calls can generate and is paying me decent dividends for it. So yeah, just wanted to share with you this stock, this mutual fund that I bought today and at what price. So if you have any questions, leave them in the comments below. As always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back. Thanks for watching.